Joining us now is Nabil Al-Rantisi. He's Managing Director of Capital Markets at Daman Investments. Nabil, thanks so much for coming on.
Thank you.
One other thing actually pushing up the oil price this morning has to be the Rex Tillerson news. So we have RBC's chief commodity strategist saying that the firing of Rex Tillerson and the hiring of Mike Pompeo is going to potentially, quote, have very big implications for both the Iran deal and U.S. policy towards Venezuela, all of which you might expect to be bullish for oil.
Probably that would affect the oil prices going up. Everybody is trying to push the oil prices in a way or another to different levels from here because it does serve the purpose of everybody when they're selling all these oils. The challenge is the U.S. productions have been increasing.
Right.
OPEC has been relentlessly trying to control production globally to increase prices, and so far they've done very limited success, in my opinion, when it comes to that.
I have just the chart on U.S. oil production. So I know we had the API data yesterday showing a fall in inventories, but we do have EIA data expected later today. That's expected to show a build. You can see the build on this chart. It's G#BTV 8055. It shows inventories over at Cushing. They've been falling. That's the blue line, but that fall has been sort of moderating in recent weeks. Meanwhile, the WTI futures curve has flipped back into contango, which is exactly what OPEC doesn't want because it encourages U.S. producers to start pumping oil and then store it for a future profit at a later date. So how much of a headache is this dynamic actually going to be for them?
No, this is going to affect OPEC big time because the thing is, cost of producing oil in the U.S. is higher than other places on earth. And when OPEC just tries to cut production and increase prices, it makes it more viable for the U.S. producers to produce more.
Right.
So it's a vicious circle. It's a game that you can't really end because the higher the prices, the more U.S. producers are going to get into the business.
So I think you've answered this question already, but is there any way out of it for OPEC?
No, I don't think there is. It's just you need the global demand to soar again, and that is the only way you'll get oil back into 70 or the 80 territory.
Where do you see it actually going, though? I imagine it's not at 70.
I think it's going to stay between 50 and 60 for a while, or 65. In this range, we've been seeing this range for, a couple of years now.
Yeah.
I don't see any major turn down or turn up at the moment with oil.
So the other interesting thing happening in the market is we've seen positioning begin to turn a little bit more pessimistic. We had those record long positions on oil futures. Now we've seen short positions beginning to build. How does the financial market actually play into all of this? Because they've been somewhat friendly to OPEC and its strategy so far.
Actually, in the last year or a year plus, we haven't seen a big effect of the oil price movements or decisions on the financial markets, which is a bit unusual, I would say. That hasn't been the case in the past. But I think because of so many dynamics changing in the oil prices, the market is trying to discount it up front before seeing or looking into any decisions that comes out from any oil producer like OPEC or non-OPEC members.
Right. So how does the oil price factor into Middle Eastern assets then? Because we've talked a number of times now that it seems like politics has once again stolen the spotlight when it comes to regional assets here.
I think the political situation in the region is more of an issue than the oil prices because oil has recovered from the 40s to the 60s, but yet we haven't seen an impact on the economies in the region on that angle, which explains to you that money or investors are still concerned about the geopolitical situation in the region and the political issues that's happening between the neighboring countries.